Welcome back to Chart Request Live, everyone. My name is Patrick Donawilla. I'm the editor of the Chart Report. Joining me today is Alfonso de Pablos. Alfonso, how are we doing today?
Hey guys, hey Patrick, everything good?
Well, so you guys know the deal. You guys request the tickers. We break it down, tell you how we might trade them. Just so you guys know, just to keep the lawyers happy, this is for educational purposes only. Nothing we say here is meant to be investment advice, and always talk to your financial advisor before you make those decisions. But Alfonso, with that said, what do you think of the broader market here? I mean, it's been a rough tape, been kind of weak.
Yeah, it's been a rough tape in the last few weeks. We're entering a weak seasonal period, so we might expect some weakness overall. Definitely, what it's that has caught my eye is the semiconductors. The weakness in semiconductors stands out. You don't want to see these leaders get hit more because that will be very bad for the tape. What do you think?
Yeah, I have this head and shoulders drawn here. I mean, it seems like everybody's seeing that, which, I think that's kind of encouraging if you're a bull. I mean, some of the best pattern failures come from failed head and shoulders tops. So if this isn't a top, that's very bullish. But if it is, I mean, we're talking about the biggest area of the S&P and the leader throughout this bull market. So we really can't afford to lose semis. If this is a top, very bad. But if it isn't, very good.
Yeah,
So
that's right.
just kind
Also,
of in this.
on a
Sorry, go
relative,
ahead.
on a relative terms, it's completing or it's trying to complete a top relative to the S&P. So that's interesting too. But definitely, you don't want to see SMH lose that key support level on absolute terms.
Yeah, wait, sorry. You're talking about the relative trend here, right here?
Yeah, the relative trend also showing like a kind of head and shoulder formation.
Yep.
Um,
Right here at the fib too. I mean, this is happening after whether we're talking about semis on an absolute basis or relative, they all hit that fib, and that's kind of when they started stalling out, right?
yeah, and I remember when you call out to look at these levels, not only in semiconductors, but in the Nasdaq, in the S&P, coming into play, logical levels to take a breather. So now we're seeing it, and let's see what's happened.
Yeah, yeah, absolutely. And you know, you mentioned it earlier, but that seasonal weakness in September, you shared that great chart, got shared a lot showing normal seasonality and election year seasonality. No matter how you slice it, September is always kind of a troublesome month here. Everybody knows it, but that still doesn't change the fact that it's history, right?
Yeah, that's
But
right.
let's get right into the tickers here, shall we?
Yeah, let's do it. So first of all, we have uh, VRNA. Dan is asking us about that stock.
Verona
That by,
Pharmaceuticals. Do I have that correct?
yeah, that's correct.
You know, this looks pretty good. And I gotta say, biotech has actually held up pretty well. We can look at this. We can look at biotech after this, but wow, this is a great chart.
Yeah,
Whoever
and
brought
even,
this,
even if you zoom out a little bit more, back to 2018, you will see that it recently broke out of that massive base. It's consolidating.
oh my
It's,
gosh, yeah, you're right. I didn't
yeah,
even. Whoa, beautiful. Wow, that's a textbook cup and handle.
yeah, that's right.
Wow, whoever brought this, kudos.
So
Very
I
good.
really like this one in general, and the relative strength definitely stands out for me.
Yeah, starting off strong, starting off with a good one. In this ugly tape too. Wow, nice. Um, so as far as targets, the line in the sand's very clear. 25. It's above there. Risk on. Um, you're looking for new highs. If not, then forget about it. But sorry, let me just. So if you want to be aggressive, you got 40 as a target. That's a nice trade. If it's above 25, you're looking at 40. It's I'd have to calculate it, but that's a decent chunk of upside there. If you want to be a little bit more conservative here, you could use 35 as a target. Or you use both and just kind of say, okay, once it's in this zone between 35 and 40, that's when I want to think about taking some profits and taking some risk off the table, maybe moving up my stop to break even, things like that. But structurally, this is a great setup.
Yeah, it's a beautiful chart, and what I like the most about these charts and individual stocks is when the risk is well defined, knowing when and where you're out on a potential loss. It's a huge advantage before putting a trade, for example. Definitely, the relative strength stands out because if and when the selling pressure diminish, this one could explode higher if still above that 26 level.
Yeah, yeah,
I
that's
think.
that's exactly right. And what he's saying is basically, we're in a kind of rough tape right now. So if this thing's breaking out to all-time highs in a bad tape, just imagine what it's doing in a good tape. And that's what relative strength is all about. So perfect example of that here. And yeah, this thing looks primed for 35, 40 if it's above 25. Really good.
Yeah, that's right. So now the
Momentum's
next one
cooperating
is,
just perfect.
sorry.
Momentum's cooperating too, so it's just perfect.
Yeah, it's getting overbought. So yeah, that's a bullish data point. That's for sure. So next one we have CHKP, Checkpoint. Is cybersecurity.
All right. Cybersecurity. Tech has been awfully weak these last few weeks, but software is holding up okay. It's holding up a lot better than semis. Hasn't been enough to offset it, but and software was pretty weak in the first half of the year, so it's kind of interesting that you're seeing that rotation.
Yeah, and look that bullish momentum regime. Pretty nice. I
Oh
remember
yeah,
that
very nice.
I wrote about this one years ago, like 1 or 2 years ago. Right at that shelf former highs from the 2000,
Yeah,
and this year or late last year it finally like emerged
yeah,
high.
finally resolved higher. I mean, look at this. It was choppy and messy for like 5 years. And
Yeah,
to your point, finally resolving cleanly higher.
and I think if you draw a extension from that massive correction,
Yeah,
uh, the 161 is right there, I think.
great point, Elf.
Yeah.
Yes, yes, sir. Ah, so kind of a tough place to be starting a position here. Um, Beautiful uptrend. I would never short this stock, but it is kind of at this level where you might see some consolidation. And with this stock, we've seen this thing go sideways for years. Years. I mean, look at how choppy and frustrating from the pandemic to last October was. I mean, just really no trend here. Um, so it's tough. I think, yes, we are above this. And if you really wanted to start a position here, you buy it and then don't let it get too far below this 185 or 180 level. And then you're looking for the next fib around 293. Um, but I think you got to anticipate a little bit of chop around this level. Yeah, we're above it. Yes, we've cleared it, but really not out of the woods just yet. Um, that's tough. I I'm inclined to be more of a seller at this point, but what do you think, Alf?
Yeah, I think a digestion of some gains at this level will be more than welcome. Of course, after that extensive rally from that breakout level. Yeah, I would like to see some consolidation around that area and see what happens. I think it might be a little bit overextended over the short term, but the primary trend is up. And yeah.
Yeah. Not a name that you want to run out and go short, right?
I mean, no, because it's not giving me any kind of signals of a potential like failed breakout, or a top information, to the downside. Not for me. I like to follow trends and try to keep it simple. I like to buy the strongest ones. I think this one is a strong stock, a strong uptrend, but it might need some consolidation in the near term.
Yeah. I was just gonna check it on a relative basis here. Oh, that's kind
Wow,
of interesting. Yeah,
that's a nice base.
that is interesting, isn't it?
That's a nice base.
Yeah. So on a relative basis, it looks actually better than it does on an
Yeah,
absolute basis.
yeah.
This isn't great, that we've had this new high and this isn't oversold yet, but there's still time. Um, that's a tricky setup there.
It is a trick setup, but I lean more on some consolidations. But yeah,
Yeah.
let's see.
Yeah. What do we got? Anything else?
Yeah, Nicholas asked us about FANG.
Fang, not the Fang stocks. We're talking about Diamondback Energy.
The real thing, right?
The real thing, yeah, exactly. Now, energy hasn't been great either. That's been a tough one too. But
Yeah, I mean, crude oil is threatening to break down of that range right now. Today is down almost 4.5%. So I think if you're betting long energy, crude oil, of course, has a lot to do in that conversation.
right. Yeah, it's not just this chart that we need to worry about. It's crude oil as well. And this one looks like it's really headed for a retest here. In these last few days, we broke these summer lows here. Not the greatest sign. Now you got to be looking at these November highs from November 2022. Also came into play last October. And that comes in around 167, 166. So that's your immediate support now. Maybe if you want to try a retest, you could there. I wouldn't let it get too far below 160 even. And then beyond that, if it's below 160, then you're looking at a full retest. I think that's the more likely scenario is we go down and retest these 2018 highs over here, the breakout level. And in that case, you might as well just wait to put on the trade. But to your point, crude oil really needs to cooperate. And that one just looks like a fresh breakdown. Yeah, this thing, it's tough to see any major support on this at this point.
Yeah, it's trying to break down.
I really think energy needs some time here. I think
continue.
I think you'll probably have a chance to buy energy lower in the next few months. So with this one, I would prefer to just wait on it.
Yeah, I agree with you. Not only the FANG, but for example, Occidental Petroleum. We know that Warren Buffett has been buying in the past two years. It's failing below of what we call the Buffett zone. I mean, Warren Buffett has been buying Oxy over the past 2 years. Every time that the stock is below 60, we have been tracking this name in the past years. So the fact that it's breaking down, the fact that we haven't seen any form for and Warren Buffett stepping in here, it's definitely caught my attention. That's for sure.
Yeah, absolutely. So with Occidental Petroleum, for those of you who weren't following it, Buffett has been buying at this what would you say, around 55, 57?
Yeah, the average price right now it's around 54. The last time I checked it.
So a little lower than I thought.
Yeah, we're right there.
But yeah, last week we got a pretty ugly breakdown, and I'd say that was a pretty decisive breakdown too. And so far, Buffett's been it's been crickets, right? We haven't heard anything or seen anything, any new purchases from him. So it's been interesting. I mean, I always thought it was kind of a lazy trade that we're just buying. It's just like coattail investing. You're just buying this thing because Buffett was. I use this stock all the time and as an example of why support levels work. In this case, you had a very large investor buying at more or less the same level over and over again. So Warren Buffett was literally creating support for this stock. He was support here. Um, but he's decided to stop, or at least right now. I was talking to Steve earlier. I think there is a scenario. I'm not saying that this is the likely scenario, but I think if this trade were ever going to work, it would make sense for it to work after a failed move. So, you scare everyone out because it was going to be the easiest trade in the world, right? Oh, we just bought it because Buffett bought it. You scare everyone out and then you rip to the upper ends of the range and then finally break out. I could totally see a scenario where that happens and it would be hilarious. But
I couldn't agree more. I couldn't agree more, and I like
right,
it.
right,
Yeah,
and we've seen that time and time again. Like look at Apple, right? It was in this grueling range forever, and when did it finally break out of the range? Once it shook people out, once it scared some people and said, okay, oh, we're breaking down. And it really only broke down for like a day or something. Yeah, you can see 2, 3 days. But just imagine the news flow during that, right? Everyone on Twitter is talking about, oh gosh, Apple's breaking down. The largest stock in the world is breaking down. And then, oh wait, it doesn't. And it just kicks off one of the sharpest rallies it's had in a while. I mean, Apple moving 43%. I mean, the largest component. Um, so I'm not saying it's going to happen the same way, but it would make an awful lot of sense for this to start or for the move to finally happen. Is that now? Again, yeah, I don't know that that'll happen because momentum looks terrible. This thing's falling like a knife. So I'm not saying that'll happen, but it would make sense. Wouldn't be surprised.
yeah, and then Terra Space is making like new 52-week lows, OIH. Um, Let me see, XOP. It's right there at the lower ends of a top information of a sideways range, right at the January highs. Definitely not looking good for energy. It's getting oversold. And that how is the energy right now? Very vulnerable right now. Yeah.
Yeah, I completely agree. It's more just like a wait and see thing, right? It's one of those things. I'm not ready to call it a total breakdown yet and write it off, but certainly not looking to get long at this point.
Yeah, I think patience continue to pace off here in energy. That has been the case for the past couple of years, in fact. So yeah, let's wait and see what happens.
Yeah, I think it's funny. We finally broke out of that range that we've been in since 2022, this spring, and we tested those 2014 all-time highs, and then
Oh
just
wow!
couldn't do it. Here we
Oh
are
wow!
going
You're
back.
right. You're right.
So yeah, this one just needs more time. Energy stocks just probably aren't the best bet right now.
Yeah, I agree. Another one that it's interesting is Twist Biosense. Joseph Briggs asked us in the chat. So let's take a look at that one.
Yeah, so you
I
can see,
remember that. Yeah, we already talked about this one in the show.
yeah, yeah. So I've started leaving up my old drawings on from the show on here, and you can see we've already marked this one up. This it tried to break the neckline here of this Head and Shoulders bottom here. Tried to break the neckline, couldn't get it done. Here we are. Haven't totally invalidated this Head and Shoulders yet because we haven't, breached this shoulder here. But not a great look. I really want to see it above this VWAP from the all-time high. That would show me that buyers are in control and that the bottom truly is in. if it does, you want to see it reclaim this 50, 58, or you could even call it 60 level. That would also include clearing the VWAP. And if it does that, then you're looking towards the 80s. Those were the lows in 2021 before it broke down. You're looking at, yeah, upper 80s. And then beyond that, then you're looking at 136. But we won't get ahead of ourselves. This thing has a lot of work to do before then. As far as like, this was showing relative strength, right? Within biotech or no?
Yeah, I mean, it was setting up very nicely, but from that chart, what I see is that, or that chart is telling me it needs more time to complete that reversal base.
Yeah.
That's simple. Hitting and getting rejected at a critical resistance level that coincides with the VWAP from the all-time highs. That's a confluence of resistance. Price needs more time. And again, similar to the energy trade, patience in this name continues to pay off. And until we see like a decisive break at about, I will say 60, I wouldn't touch it. I think the bias right now is sideways until we reach 60.
Yeah, messy because it's in that transition process from a nasty downtrend, and it's hoping to turn this downtrend into an uptrend, and that process is just so messy. We're talking about a trendless environment, right? And as technicians, what are we doing? We're looking for trends. So this one, it just isn't there right now. But I get why people are watching this one so much because just look at the journey this thing's had. Gone from, it peaked at 215 in 2021, went all the way down to 11, and here recently we bounced back to 60. It's just all within the span of like 3-4 years. So
yeah, it's crazy.
I get it. There's a lot of juice with this one.
No, that's right. That's right. And this bottoming formations takes time. Tend to take time.
Frustrating process.
Yeah, that's right.
A lot of starts and stops. You take 2 steps forward, 1 step back, that kind of thing.
Yeah, that's right. So now let's take a look at some from the chat. Jonathan was asking us about PNTG.
PNTG?
PNTG.
Okay, the Pennant Group. I am not familiar with this one. Never seen it.
Like that uptrend this year.
Yeah, medical/nursing services. It's not a REIT or something, right? It's like
no, it's a healthcare service stock. 1 billion. It's very tiny, but it's looking good, honestly. Look at that uptrend since we bottomed in November last year.
Yeah, here. Let me switch it to a daily here. Yeah, wow, I see what you mean. Really persistent uptrend. Now it is coming into this level of resistance. You can see that was kind of the post-IPO peak in 2019. Acted as support, broke and turned into resistance here. Now I gotta imagine it's gonna act. I mean, it is acting as a little bit resistance, but hasn't totally broken down yet. If you do clear it, I think you're looking at this little June 2021 highs around 43 is kind of like maybe your first soft target, and then you're really trying to play this one to all-time highs, I think around the mid 60s, mid to upper 60s.
Also, draw a Fibonacci retracement from that peak to the graph. Yeah. It's right there, I think, the 38 retracement level.
Yeah. Yep. There you go, Else. Very good eye. Hey, how about this RSI profile, though? Very encouraging. Very encouraging. And what we like about this is that as price is kind of making new highs here, yes, they're not all-time highs, but they're new 52-week highs. RSI is also making new highs here. In this case, RSI is making all-time highs. But you're making higher highs each time. So that's not a divergence. That's the opposite. It's confirmation. So it's confirming those new highs there. So we like to see that. Of course, this is weekly RSI. I have a lot of friends who won't even look at weekly RSI. They prefer only looking at daily. So, yeah, worth noting that. But this is an interesting setup. I haven't seen this one.
Yeah, but in the daily, we use the RSI for basically two purposes: to find divergences, but also to define bullish or bearish regimes. And what I see from this daily RSI, it's a perfect example of a bullish regime. Multiple times.
Elf, would you worry about this though? Would you worry about this divergence, or I mean, yeah, there's no wrong answer. Just yeah.
I mean, divergence could last time, to complete. We need to see price to confirm the divergence. That's
yeah, and divergences can last forever. There's a joke about them. Divergences are like laxatives. You never know how many are enough. These things you could keep taking them, and never know when disaster is going to hit. But
you need,
I mean, RSI can diverge for years, right? Yeah. And what do you want to kind of explain what you're talking about with confirmation and what that looks like here?
I mean, the divergence to have validity in that sense need for price to confirm. So for me, any breach below, let me see, that pivot high from July will confirm that divergence. That's how I see it in my opinion.
Yeah, and so he's talking about this basically, because what is a divergence? It's when price made a new high, RSI did not. So he's looking for confirmation for it to break that price high, to confirm that this is a divergence and it is actually breaking down. It's confirming. But what he was talking about before, as far as a bullish momentum regime, notice how RSI is oscillating between 50 and overbought. It's in that kind of upper end of the range here. You're not seeing it come anywhere close to oversold here. That is a great example of a bullish momentum regime. So in that sort of bullish momentum regime, I think you shouldn't be looking for divergences as much, right? Or you can be a little more forgiving when you see those divergences. Would you agree?
Yeah, I agree with you. And again, at the end of the day, it comes all to a confirmation in price. If we see price below that high from July, I will say, hey, this divergence is what can I say, completed, right?
It's confirmed, yeah, right. Because I mean, there is a divergence there. There's no question about it. It's just, should we worry about it? Do we need it matter, right?
Yeah, exactly. It will confirm, and the next thing I will do is to take a look at the RSI, and if it's heading towards 30, or if it's getting below 30, that's the other aspect. Because if the divergence confirmed and prices break below that pivot high from July, and then the RSI is below 30, it's getting oversold, the regime change, right? And the behavior of this price action changed completely at a logical level of resistance. So I will be a little bit more cautious if that happens.
Right.
Yeah.
And to this one, I mean, this one's already corrected a little bit. It's already corrected 9%, and RSI is still above 50. That's pretty good. It's
impressive.
Yeah,
right.
All right, I think we've beaten the crap out of this chart.
Yeah, let's change. Donovan was asking us about CLX.
Man, these consumer staples are just insane right now. You look at you look through the consumer staples sector. you'd think you were looking at the semiconductors. I mean, it's just some really nice setups in here and the most boring stocks on earth. This
Yeah.
one's Clorox and it's shaping up nicely. You can see it's been trending lower since the pandemic. I remember during the pandemic, a friend called me who knows nothing about investing, and he asked if he should buy Clorox because, and the thinking was there, like is here we are in the middle of a pandemic, everyone's bleaching everything and sanitizing everything. Clorox should benefit from it, and it did initially, but then if you weren't quick with it, all that ended in August 2020, fairly early in the pandemic, and then it's just been really, really rough ever since. So, but looks like in the last 2 years, it's formed a pretty durable bottom here. And this is just kind of a classic reversal pattern. I don't know if some of you guys are fans of Wyckoff, that way of looking at the markets, but that's what they're kind of looking for. First, you get the downtrend break. That's kind of the first step in a reversal. Then you get this basing action, and then you kind of form into the uptrend. Very similar to like stage analysis too. But with this one, I would say that is kind of your level.
Yeah, ideally, you would like to see a confirmation and a break it above horizontal line, not only this trend line, right?
Right. The trend line is You
trend line is like the first step, right?
Right. Yeah.
Everything begins with a break of a trend line. Then you have you need to see a confirmation of a key pivot highs or a key resistance level that confirms a shift in the trend.
Yeah, very well said. With this one, if it's above 165-ish, 167, call it, then I think you're looking at 186, and those are the highs, January 2022 highs, also July 2021 highs. It was just an important pivot. But ultimately, I think, if you're patient with this one, I think it will go back to all-time highs. I think the reversal's already in. It just might take a little bit longer. After this, though, I wouldn't touch it if it couldn't hold like 158. That would be kind of a sign that things are failing there.
Right. Yeah.
But I mean, some of these staples just look incredible. I mean, look at Colgate Palmolive.
Wow.
I mean, they make dish soap. You'd think they were making semiconductors over there.
Look, Philip Morris. That's
Philip Morris, my favorite setup right now.
And Coca-Cola looking good.
Coca-Cola. I actually haven't looked at
a lot of defensive rotation and defensive leadership in the past few weeks.
Yeah. So. Not the best, right? Yeah. We don't love to see that.
Ideally, you don't want to see defensive rotation and defensive stocks lead on a relative basis. That will be a little bit concerning and signs of risk aversion or defensive positioning from investors. Ideally, you would like to see technology, discretionary stocks, industrial financials lead the way higher. But it hasn't been the case in the past few weeks. So I personally I'm monitoring these risk appetite ratios of consumer staples relative to consumers discretionary, just looking for clues about risk appetite in general.
Yeah, Alf, one risk ratio I keep coming back to is the high beta versus low volatility. Just nasty fail breakdown from this ratio. Fail breakout, I'm sorry. So what we're looking at here is high beta stocks versus the safer, boring, more like value stocks, low volatility stocks. And when this ratio is breaking down, it just basically says that investors are a little cautious and don't want to take as much risk in the super high beta stuff, right?
Yeah, well said.
Thanks.
That's true.
What do
So
we
how
got?
about we take a look at NI? Wavy want to see NI. Let's see.
Wavy, what's going on? Oh, nice. I like this one. What is this like a metals play or something? What is this?
Utilities, gas distribution.
Utility. Wavy's always finding these good bases. I don't know where he's finding them, and I've never heard of them. I've never heard of them usually, but he's always finding them. So this one, nice 2-year base here, broke out a couple weeks ago. Looks good if it's above 32. 32 gets you to 38. 38 and a half. Yeah, I mean, this one just looks beautiful. Nice primary uptrend there. Looks
Yes,
like it's
somehow a little bit.
Gosh, yeah.
This massive consolidation is happening within the context of a strong primary uptrend. We are breaking to new all-time highs. So I really like
this thing's been a mess for 8 years.
Yeah.
But within the context of a really strong uptrend, right? So it's basically the last 8 years has been digesting all that progress it made after the financial crisis.
Yeah, that's right. That's right.
But finally resolving nicely higher. Yeah, I like this one.
Yeah. Wow, monster base there. Wow.
Yeah, I bet if we fib this one out too, I gotta imagine those fibs are probably pretty important, right? Oh yeah, look at that.
Oh wow.
And right.
Wow.
Where
nice find. Yeah.
Oh, and the 161 acted as support there during the pandemic. Went right from the 261 to the 161. Oops. Sorry about that. All right. But yeah, this one looks good. Did I get a target on that? Did I? If I didn't.
Yeah, I think if we're about the April highs, I think the path of this resistance is higher. I think it's a logical level to define risk if you want. And it's a nice base within a context of a nice and strong primary uptrend. That's for sure.
Yeah.
How about Walmart? Nicholas was asking us about Walmart. What do you think?
Yeah. So you got it right here. So this one, I think it's the largest within the consumer staples. It's definitely been one of the stronger staples, which, as I've been talking about, its staples have been really strong lately. Yeah, it's been like Walmart and Costco have been doing a lot of the lifting for staples. But this one here, we hit the target recently, this second target here. Clearly not stopping it though. I mean, you had a little stutter step there last week, but I mean, the overall market was really weak, and the fact that Walmart was only down not even 1%, that's relative strength. And we're all-time highs this week, not bad at all. If we're above that 76 level, looks like you're playing it to 100 up here. And if we're not, then you're looking at 62 for support. But this thing, RSI is confirming here. It's hard to find anything to hate about this right now. What do you think?
Yeah, I mean, strong uptrend. The stock.
Where am I wrong?
I mean, I think.
Tell me what you don't like.
No. I mean, I think we might see some consolidation around that level for a couple of weeks in the short term.
Right.
But
I mean, look what happened here, right? When we got to the 161.
Yeah, exactly. Yeah, something like that. Something similar to that. I think that would make sense.
Yeah.
but the primary trend is it's very very lovely, honestly. Here, strong stock on a relative basis is reaching I think its highest level since what 2020 or 2020.
Oh, great point,
So
Alf.
so that's very encouraging for the company, for the stock.
Yeah, very good point. Yeah. So this is just Walmart on a relative basis. We're looking at Walmart versus the S&P. Broke this little shelf of resistance from 2020. Looks like you're playing it back to the 2020 peak. And that's significantly higher. And that's just basically saying that the door is wide open for Walmart to outperform the broader market. And it totally has been. So,
Yeah, that's right. That's right. So let's take a look at a couple more.
Sure.
Let's take a look at Tree, TREE.
Another one I haven't heard of. Oh,
No.
I've heard of Lending Tree. Yeah, I know this one.
Do you like these charts when you see it at the first glance? Do you like it? What's your first thought? It comes to you.
That's a great question, Alf.
When you put these charts.
These ones that have fallen precipitously since mostly the kind of post 2021 decline, if they haven't recovered a significant amount, it's almost like when are they going to, right? Like so definitely and this one looks like it's kind of losing momentum on this rebound. I mean, looks like it had to kind of rebound with the broader market. Everything else was rebounding, but it didn't really want to, because here we are just losing momentum. You can see it kind of almost slowly rolling over here, and we're coming into these, like, what is that, 2015 lows here, right here?
Yeah, 2016 lows around.
Yeah, and we got a
3.
gap here on the weekly chart. It's always funny when you have a gap on a weekly chart, but
Yeah, very.
put it into a daily. Oh, you don't really see it on a daily. That's funny. But yeah, when you zoom in on the daily, also kind of running into resistance here. I think it's fine as long as you're above these February highs. Then you're probably looking towards the 2020 lows around 136, which that's over 100% upside. That's really nice.
Yeah, I think for me, I think it will take a little bit more time to complete that base. I think we can see some sideways action in the near term at that resistance level, and then ultimately we can see an upside resolution. This is a 600 million company, so it's not
it's not even a billion.
Yeah, it's below 1 billion. So
it's tiny.
Yeah, it's tiny. It's tiny. So I don't know if it will lead in during these conditions. Ideally, you will like to see small caps overall leading the way higher. It's not the case. So I think that's a good area to digest some gains from of the October 2023 lows. That's for sure. That's how I see it.
Yeah, I mean, I get it. I get why people are watching this thing. This thing was at 500 just a few years ago, not that long ago. So, but it's not going to be that easy. You're not just going to go from 50 to 500. They're going to make it pretty hard on the way back.
Remember that the bigger the collapse, the longer it needs for repair, right?
Yeah. And that was one big collapse. I mean, that was, what do we get down to? Like 97% drawdown.
That's crazy.
I mean, that's basically everything. You went from $500 down to $10.
Wow, that's crazy, man.
2022, I'm sorry, was a weird time.
It was a tough year, 2021 and 2022. Big drawdown underneath the surface. This is a great example of what happened. And now, I mean, after 2 years of a bull market, it's trying to reverse the trend. So yeah, let's see what happened with TRAE. Another one, let's finish with SNPS.
Yeah. Synopsis. All right. This is one of those just steady, nice uptrends. Look at that thing. Look at that. We're going all the way back a few decades.
What an uptrend.
What an uptrend. Yeah. But hasn't been too great lately. We're down 25% from the highs.
It's trying. It seems that it's trying to complete a top information. It's making what near 52 lows as we
Yeah.
big, right?
I think you're at a pretty important spot right now, actually. Right. These this, what is that? The 2023 March 2023 highs. This was clearly resistance for a few months here. Here we are. We're testing it. If that doesn't work, then you're looking at least this gap down here at 380. Yeah, I think that's your probably next place of support is that 375, 380 level.
Yep.
But I could see it digging in here. I mean, it's already seeing some demand here. If you do, I mean, you're looking to play it back to all-time highs here. So if you really wanted to trade this one, I would say get in here, throw a stop around 450, and then you're looking for 625 for your upside target or beyond.
Yeah, but look at the relative trend. It already completed that top information.
Yeah.
So,
I mean, even a longer term, this just looks heavy. I mean, beautiful uptrend, but it just looks like it's losing momentum. I mean, it is. You know, we haven't hit overbought since last year on a weekly. And this is the deepest drawdown it's had since the bear market. So significant loss. It might need some time.
yeah, that's for sure. I don't like this one, honestly.
It's something about it. Something just seems fishy, right?
Especially because of the relative trend, honestly.
I didn't even look at that. SNPS.
Yeah, relative to the S&P, making new lows. It already completed the top. So
yeah, you're right. I mean, that looks like a clear trend breakdown on the relative basis.
Yeah, right there.
Yeah. Yeah. And I mean, boom, hitting oversold here on a weekly RSI. Ugly.
Yeah. But as you said, and as you mark the chart, let's see how it behaves at this support. At this potential support level. Okay.
Yeah. So, it really has to step in soon.
Yep, that's right.
So, what do you think? Should we leave it here for today?
Let's do one more. In the chat was asking us about FNGD. Let's take a look at this one. I don't know if that's.
So this is a triple leveraged ETF.
Okay.
From our good friends over at Microsectors. It looks like actually, what has this been taken off? Anyway, yeah, let's not look at this one just because it's a leveraged ETF. With any leveraged ETF, we tend to look at the underlying index rather than the ETF itself. For example, like if you wanted to trade JNUG, the junior gold miners, you wouldn't be doing your analysis on this chart. You'd be looking at GDXJ, the non-leveraged version of it, right? Yeah, or even better, you look at the futures if you have it.
Very well said. Very well said. I couldn't agree more about the leveraged ETFs. So yeah, that's I think that's all for today, right, Pat?
Yeah, Elf. We got to have you on maybe Thursday doing the charts, maybe
Yeah, I
Sam.
will love it.
Um, but yeah, some great setups. Do you have a favorite setup from this? There were some
Um,
good ones.
yeah, I like VRNA from the beginning. I really love
Yeah,
that massive bass. So
yeah, I'm gonna have to say that was my favorite too. We
that's
started
thank
off
you.
strong. We saved the best for first. What was that? VRNA?
Yeah,
Yeah. So this is the one in case you guys missed it. Beautiful cup and handle pattern, multi-year. 25 gets you to 35 or 40. Beautiful trade there. But Elf, let's leave it here for today. Thank you guys so much for watching. If you want us to get to your tickers first next time, just be sure to email us right now at questions@stockmarketmedia.com, and we'll be sure to hit them at the top of the show on Thursday. Again, my name's Patrick Dunuella, Alfonso de Pablos. Thank you guys so much.
thank you guys.